Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Once again, the Australian dollar bulls attempted to take on the challenge to the higher side of the range, which was around 71.30.50. Now overnight we did get to a high of 71.31 before slipping away from the supply zone, which is still located at 71.50.65. Data out of the world's second largest economy helped calm down global markets yesterday, as concerns about slowing down in global growth was a little bit easier after the Chinese manufacturing PMI figures climbed to a 6-month high of 50.5 in March from 49.2. Then yesterday, the Cajun Chinese manufacturing purchasing managers index, which was the PMI, also climbed to 50.8 in March from 49.9 in February. This is the highest level in 8 months. A number above 50 indicates expansion, where a number below 50 shows contraction. So today's focus is now back on the RBA as it prepares to announce its interest rate, along with publishing a statement that could see a little bit more dovish to the RBA, or maybe the central bank remains neutral. The RBA has kept low record rates now at 1.5% since August 2016. Looking at the technical picture though, in an intraday, the range is 70.85 to 71.25. I am still a seller towards the region or supply zone, that is at 71.50.65. It is ascertained that the market will eventually break down and look towards the region of 70.40.45. Euro hasn't bounced and still maintains above the level of 111.60.80. With the technicals remaining oversold, I am a little bit careful of coming out any calls at these levels, although the dollar index still remains at its high around 96.89 from overnight. What is interesting though is that the fact that we still have the non-farm payrolls to come this week. Now that will be a bit of a clincher, as the market previously only came in at 20,000 new jobs. If we get another low number, this could see the dollar weaken and actually see the euro turn around and look back towards the region of 113.10, which I prefer at this present stage. So if you are short, lower your stop losses or start looking to maybe trim some of your short position back as we get closer to 111.60. Dollar yen posted fresh high after breaking above 111.05. I am viewing towards this level of 111.60 as a potential cap. We should see supply come from here and then see a turnaround, although my view is more to the neutral side, as I haven't really had a strong view in this last few days, is that the indicators are still a little bit somewhat mixed, with the RSI high, but the MACD a little bit slow on the uptake on this move. Nevertheless, we could still see a rejection from 111.60.65 and back down to 110.75 to 110.30. The pound knee-jerked from the level of 129.50.80 after posting a low around 130 the figure. It is assessed though from my view that the direction is still somewhat mixed, even though we are trading within the parameters of 129.50 to 133.50. It is very hard to trade in this whipsaw trade manner, so I'd rather stick away, but a break of 129.50 would give a view down towards 126. Gold not bouncing and struggling at this stage, and now gives concern that we could see a challenge towards the level of 1,280.82 with minor 86. Reassess from 80 as a break beneath there would negate the top side of 1,324 and maybe bring into a target of 1,260, so be on your guard there. Wrapping up with oil, well, the market's crushed the level of $61 a barrel after rallying 2% overnight. It is assessed though the market could actually still progress further to the upside. The measured move from the inverted head and shoulders is still at 63 to 64. On the day though, support comes in at $60 a barrel with 58 underneath, and the immediate target is 62.45. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.